global markets rising on President Trump's new and improved trade deal with Mexico. This as consumer confidence here in the United States hits the highest level in 18 years. Here to discuss, Bulltech Capital Markets Head of Global Research, Catherine Rooney Vera. Catherine, in terms of the trade negotiations with Canada, even what's happening with China and Europe, what are investors watching here?
Investors are watching if Canada gets in. I heard John mention something earlier in the program, and I think he's dead on. It would facilitate the process for the U.S. to pass this effectively and quickly, and increase the chances of ultimate successful passage if Canada were to come on board. It's not necessary. It would elongate the process were Canada not to, but a bilateral agreement is not what the TPA authorizes at this juncture. So if they want to pass it to the next Congress, I think that's, that's kind of throwing it up in the air, because a House that's potentially Democratic majority may not be as easy to get this deal through.
John?
So talk a little bit about how markets are responding to trade deals. If the U.S. makes progress, for instance, with the Europeans and more importantly with Canada, what kind of market reaction are we going to see? Not with Canada, with China.
Well, the markets have been off to the races since the president won. I mean, it's incredible. We see consumer confidence out today, the best in 17 years, present conditions, future conditions, all multi-year highs. So the markets are liking this, right? And I was at the IMF at every meeting the past couple of years, and consensus was against tax reform, and that it would not happen, and that NAFTA was a goner. So surprise, surprise, we have, very good trade deal. I think it's positive for the U.S. corporations. It's definitely positive for Mexico that we get a deal out of the free trade. Look, as you guys said earlier, there is no free trade. It's managed trade. We know this. But what we're looking for here is fairer trade. And with NAFTA, I think it paints well for Canada and ultimately for China.
So, Catherine, it's Kevin Kelly here. Good morning.
Hi,
so my thing that I'm worried about is that we saw sort of reverberations happen in EM when the dollar got stronger, and that is a huge risk that I'm seeing. And one of the reasons why the market was up so significantly on Friday and Monday and continues to be is because it seems we have a dovish Fed now, and that leads to a weaker dollar, so it lends support to the markets. How much are you looking into that with the divergence of our central bank versus the European central bank, the Japanese central bank? Can you talk to me how the dollar and the strength is playing into your vision for the future?
Sure. EM assets look appealing right now, Kevin. I think it is a risk if you think the dollar goes higher, because emerging market asset classes, especially in equity markets, are different from ours. They're different from British, different from American stocks, where a weakening currency is in the net beneficial for multinational corporations, which get the majority of their profits from overseas. In that case, a weakening currency in the dollar or the pound, as we saw in Britain, is good for equities. In emerging markets, it's the opposite. So if FX, if foreign exchange in Brazil or Mexico or wherever you may look is decreasing, equity markets are going to as well. That means that FX, if it's undervalued, it's attractive right now, and I do think it's undervalued.
Catherine, you mentioned Brazil. Yes. Let's move on to a different story out of the region, the crisis in Venezuela. Brazil is now sending troops to the border to deter Venezuelan migrants from entering the country. Is there any end in sight to this just horrific economic situation in Venezuela that was, well, created by socialism?
Well, it was created by socialism, Dagan, you're right. And I would say that the end in sight is, controversially, but I'm going to say it as well, is an oil embargo from the U.S. We are the only guys paying full price for Veni crude. And I think that I agree with Marco Rubio. Hey, an oil embargo would break the back of this authoritarian regime and ultimately speed up its demise.
So when all energy companies here in the United States apply for waivers from the steel tariffs, maybe the government should grant them to make sure that our energy sector is safe and secure. On that note, if an oil embargo is in the cards.
Yeah, hey, and I think, look, Venezuela is the prime example of socialism's failure, right? How many examples do we need for the world to ultimately decide it's not the best economic model? This is a country that sits on the biggest oil reserves in the world, Dagan, and they import diluents. So they're exporting more human capital than they are oil. 10% of the population has fled. 3 million people have fled. So as a local authority in Brazil said, No country can withstand unlimited migration. So you're not even just feeling in Brazil, Peru, Chile. I traveled all these countries, Dagen, and they are very, it's sad. They're fed up with the Venezuelans, but the Venezuelans are literally starving and dying in Venezuela. So they're desperate to leave.
Catherine, thank you for being here this morning. Catherine Rivera, always great to see you.
Thank you very much.